All right, let's get started on today. This is June 6th. Just want to run through some of the trades we have, some market outlook, and we'll take it all from there. If you have any questions, you can certainly jump into chat. I want to put on, we'll put a trade on at least while we're in here today, and then we'll just take a quick look at the markets. And I wanted to share few pieces from me. Again, this is just basic analysis, nothing crazy. But when looking at the markets right now, as we see, bouncing off, we're still in this downward channel. We've hit the bottom, hit the bottom, hit the bottom, hit the top, hit the bottom. Are we going to head back up to the top of the channel? Potentially, we could. That would be breaking the 50 and then hitting back to the 200 and then maybe failing on that. So 4,500 might be the top of this channel. We might get there. We may not. I don't know. There's a lot of really, up and down things in the market right now, making it pretty. If anyone's predicting this thing accurately, I'll be amazed. But when you take a look at what's happening on the daily charts here, I just want to run through some quick analysis, and then we'll move on to better stuff. I like to look at stochastic momentum in the CCI here and look at both of these have come well off their lows into what I consider an oversold territory, at least on stochastic momentum, not quite on CCI. So there still could be some more upside to go. No, nothing definitive there, but if you take a look at the squeeze, momentum is definitely in a positive. It's moved from the negative down here, broke positive. MACD had broken here, and now starting to level off, which makes me think that between MACD here, getting potentially a little tired. Looking at the stochastic momentum, doesn't mean this can't stay up in here. You can see this will stay up in here for quite a while, so it can stay up here for a couple weeks at a time, and then it's typically from these valleys to tops. These are a week or two. So I think we have maybe some downside coming, but this is telling me maybe not yet. So we'll see what happens while we're in here. We're in this little consolidation area on the fib level here, and we keep bouncing against this fib level. But things are lined up, looking well, looking good. So, in the short term, we still may have some more upside to go on daily. If we take a look at the weekly, it's a different looking opinion, but things might be reversing off of the bottom. This may have been, and it came right down. Here's the April 20 low all the way to this January high of this year. The fib level, we came down and we smacked right on it and bounced. So we kind of held this fib level, the 23.6, bounce, broke it, came down, hit the 38, bounced, and now we're hitting back up against that fib level, which is kind of interesting to see. So on a weekly, you've got all the you've got oversold territory breaking positive, and you've got a ways more to go. So these lows to highs in here can take a couple months, a month or two. So we might have a month or two of upside. So again, coming back up towards this 4,400 or so, likely on the weekly. So the weekly is coming off oversold. That daily is a bit overbought right now, but it can stay up there. But maybe a little bit of a break and then a resumption of that. And then when we take a look at the monthly is not anywhere near. It was way oversold here for quite a bit of time. So it can stay oversold, overbought for a long period, but it's broken down here. I would expect at some point this is going to get to oversold territory, maybe like it did back here in 2020, March, April. time frames before we start to really bounce and rally again. What makes me think that this has another month or so to go on the monthly, I certainly think, or a couple months to go, we could definitely go for 3 or 4 more months, 5, 6 months as this thing sells down into here. But I pointed this out the other day that the 50 moving average on the monthly chart here, we came down and we banged it, and then we banged it again. We broke it actually quite a bit, and then briefly within a month, and then hopped back up. If we go out a little further, back a ways, we don't really stray that far from it. Let's look at like 15 years out. So if we go back about 15 years, I mean, at one point we had broken below it way back here in 2009. So 2008 to 2009 was a pretty good pullback, but once we broke below it and once we got back above it, we've touched it, a couple times in here, one, couple here, again, close in here, definitely hit it here. But this distance here was never more than maybe 500 points or so on it. When we got to the top here, that distance in it was, I don't know, 15 to 2, not quite 2,000 points. Well, maybe 48 and 31. So 1,700 points. So this was like 3 times larger than this distance ever really gets, which makes me really wonder, are we going to come back down and tap on this 50, which right now is around that 3460 range? Now, if it keeps climbing, it might be 3,500 by the time we touch it, 3,600, who knows? But anyway, interesting to take a look at. But from a monthly, we're not oversold. We're coming from overbought. On the weekly, we're coming off of oversold and moving up. And then on the daily, we're overbought and potentially may head down a bit. So the short-term trend is definitely probably up. The longer term trend is still down for at least the next 6 months or so. That's in ES. If we just took a look at a few charts, Facebook, I don't think it's worthwhile. So Apple, here's another one. Taking a look at Apple here on the daily chart on Apple, you've come off of these oversold levels pretty well, and now we're a bit overbought. We're not overbought on the CCI yet, but we're getting a little bit overbought. We're about to pop through here. So I think, again, could be some nice momentum on Apple to the upside, maybe on the daily. Taking a look at the weekly on Apple, we may have bottomed here. We're still declining here, but again, weekly, this might be a nice short-term bottom for a couple months period of time. Kind of confirmed here. This really sharp piece here on the CCI, if this breaks this minus 100, which it's about to do, I think Apple could get a really good run up, and we'll see how it goes. But then when you look at the monthly on it, we're nowhere near getting close to our oversold territory. We're just coming down from overbought here. So this is where we finally broke the 100, and that's usually where we start to pick up decent momentum down here to the negative 100 piece. So again, monthly, I really think there's a lot more downside to go. We're nowhere near, see how far we are from that PSR reversal. In order to reverse, you have to touch a dot. We're nowhere close to that right now. So I think Apple, longer term, downside. Shorter term, I think we have potentially some more upside to go. Maybe the 50 or 200 moving averages is what you need to take a watch. I mean, if you want to start to throw some fibs on here, might be a good little piece for us to drop into the Slack channel, is just to draw some fib retracements on here and see where they start to fall. But I think Apple short term, again, heading up. Netflix, again, short term, starting to get up there. Google, short, it's already there. These are all on the dailies getting into overbought, but on the weeklies, they almost all look the same. They're all coming off of oversold pretty well, and I think we could get a good, decent movement here up into here, and it's getting closer to triggering that PSR buy signal. So I think any pullback in here over the next week, to me, is a sign to get in short term, like nothing long, no leaps, anything like that. I think 30-day, 60-day type trades, you're going to have a lot of those options, I think, coming up. Just got to be a bit patient on it. XLE on the, just continues to stay overbought, and it can stay overbought for, quite a bit of time on it. So I think we're still pretty strong on this. Is a long squeeze. They almost never last this long. So long squeeze moving up into here. It's still strong. So I think energy is still super strong. And I think oil and gas, super strong. I think these are two good, really bullish areas to be in right now. But I think you're going to start to see some reversal. So anyway, there's a few things there to take a look at. Only one thing popped up on our squeeze fired piece today, and that is Monster Energy drink. This thing is breaking out. So if you take a quick look here, you had some resistance up here. You had a nice trend line, uptrend line anyway, that we've continued to maintain this whole time. So take a look at this thing. So this looks good to break out, and it looks like today is that day. It's been just bouncing in here. You have the 21 EMA in green and the 8 EMA. 8 EMAs just stayed above this thing. This is where it broke, so this was the time to really get in my opinion. This is also where the squeeze first started to fire. So I think this crossover here was great. Then this is where we actually broke the 50 as well. This is another opportunity at this point, and now there were stacked, and all of these are lined up, and then we finally broke the 200. So the 50 could break that 200. Any pullback would be good. But I think Monster is a good looking trade here, maybe for a butterfly or something. It's not a lot of strikes there, so I don't know how that would shape out. But if you guys want to look at any particular stocks, pop them in the chat here. Otherwise, I'm going to move on to some other things, and then we'll get back to taking a look at those. So let's take a look now at some of our trades and our positions. So in this particular account here, and again, we'll get back chat-wise to taking a look at anything. And Amazon, yeah, everybody's interested in Amazon today because the stock split happened, and what happens immediately after a stock split or into a stock split, you get a run up and then it cools off. So we'll take a look at Amazon later today. So here's our portfolio, nice and tight, nice and neat on the day, doing pretty well overall. And just mainly all 112 trades and a few others. We actually we have a couple strangles working here. Both strangles are in good shape. So we just put one on this morning. So one of the questions was, when do we put on strangles? So let's switch around a little bit more here and take a look. So when do we put on strangles? Well, here's the trades that are in this account in the portfolio. And let's start at the bottom here. And I got called out. We had winners in all of our strangles. We'll go up to 3 of these. So we had one that we put on a week ago, strangle here. So we have one strangle that we put on here, and I thought that because that was a 90, we usually like the 90 DTE, but I wanted to put something on a little bit shorter today. It's not as efficient as the longer ones. but I still felt 74 DTE was far enough, and it gave me some different strikes, at least on the put side. The call strikes are similar. Obviously, we're going to get a little bit less of a credit for this particular one, but it was a good opportunity to get a strangle on, in my opinion. I won't even look at putting another strangle on for at least a week or a major sell-off. So I won't do anything more here. As far as the 112 trades go, we are pretty full. We have one that's going to expire today. I already marked it green and I already moved it out of here down. But this is the one that's going to expire today. It's going to expire completely, above the trap. I don't see us dropping 300 and some 300 points today to get into the trap. So I'll just write this one in as a win, and we'll keep our credit of 725 here. So it's a nice 100% winner. And overall on margin, a 10% winner on margin. And this one took 38 days to mature. So we put it on at 38 DTE and just let it go all the way to the end, expiring. So we have a lot on. I just want to make sure that I have something expiring every week. And I want, a good chunk of the trade, that we want to get going is having this as our core strategy. So I've got one here it's actually for this Friday. So I'll have another one this week. Next Friday, the Friday after that. There's actually two here the Friday after that, but I happen to put this one on with using a call as opposed to a put on there. And then we have a little bit of a gap, which is why I went from the 30th to the 11th. I don't have anything in there. So that's why today we went and put on this one for July 8th. And the reason we put on the July 8th one was I didn't want to wait 11, 12 days to get some income going in. So I put this one on, but one of the questions, I think it was Eddie earlier, was pointing out, well, why did you only take, $10.50 credit versus the normal, for me, $14 credit on it? I still kept it 30 wide, but I felt because the DTE was only 32, and normally you can see I like the 45 DTE. So because I went shorter, because I wanted to fill the hole in my income stream, this thing I can't get as wide. So you can see that, instead of a 34, 3,400 for the short naked puts, I could only get to like 3,600. So I actually took less credit. It's still going to be a $500 winner if it expires. So it's not the worst thing, but at least it gives me that consistent income. Yes, it's not $700, but at this point on an up day, I want it in because I still think we could run higher, as you're seeing in the market. That I think short term on the weeklies, I think we have a decent run coming. So I wanted to get in before too long, even though we could pull back in the next couple of days before we make that bigger run. But if that doesn't happen, because you can stay overbought, I wanted this in. So that's why I took a little bit less on this one, but I just want the consistent income. I want to have at least 4 to 5 of these expiring every month on this size account at $700 a pop or so. That's what we want. So here's what we've been looking at the last few months. In May, we actually had a really great month because 4 of the 5 actually expired in the trap. Now, when you look at April, you had 4 of them expire. I had this little goofier one on that I took off quickly. I didn't want to leave that one on due to the timing of it. But again, somewhere in the neighborhood of $2,800 a month or so is what we're looking at, consistently. But you can see all winners. Going back to when we started this thing, it's all winners. And when you get in the trap, certainly pumps things up. But we're already off to a winner this month with the one that's going to expire today. So we're on the June ones, and we're doing pretty well. So that was the reasoning behind taking a little bit less on this one to keep this I didn't want the big gap between it. Now I have the 11th and then the 15th. I'm all good with those. So I've got an extra strangle I put on. I want to get up to 3, but I'm going to take a break for a while. I want to get some different strikes in here. I would still like to stay out at 92. So we need to get the market moving. It can either move up a couple hundred points, it can move down a couple hundred points. Doesn't matter. Once it does it, I will drop a strangle on. Strangle is not a market timing. It's you're just picking any date and time, and I'm going to go to roughly 7 delta and 6-7 delta and put this on and give me a 94% chance of winning. We've keeping these hedges on. Here's I've got 4 of these big ass 112 or big ass 112 trades where I'm barely taking in any credit whatsoever. You could even do it for a small debit. Is it a perfect type of hedge where you're no, because I'm taking a credit, which means if we crater down past 3,000, okay, then maybe we'll have some, some things that we'll have to do to either roll out or something like that. However, that's 1,100 points, and these two are 1,600 points away in the S&P expiring, in this month. So 3 of these are going to come off this month. So as this one probably comes off next Friday, I'll probably pop another one on. We'll go out 40 some odd days and do it. So that when we put these on longer, 45 days, it's all good. It chews up buying power. So this is the margin required when I put the trade on. So it requires a little bit of buying power. That's it. I don't care because I've got plenty of BP floating around out there. And these have been a good trade. If they expire worthless, hey, I make 20 bucks or 100 bucks. But if they expire in the trap because we're selling off 10% or so, well, these are 50 wide. So these are worth $2,500 or so if they expire in a trap. So if 2 or 3 of these go in, there's an extra $5,000. And these, as you can see, when you're using the 112s, it's not like you've needed to be bailed out on these a whole lot because there hasn't ever been a loss. Doesn't mean there won't be. There hasn't been so far. We are still doing our 14 DTE trades. We're putting those on every single Wednesday. So I started a new, just a new category here. So we started these back in May. Right now, I'm just doing 1 contract on them just to see how they're doing, but they've all been paying off pretty well. I get anywhere from $3 to $4 on them and just take them off or let them expire. I did close this one early, but normally just letting these things expire. I have a standing order for 5 cents and this one got triggered. So I do that just so I can monitor it more than anything, but you know what? There is no stop. So question on the 14 DTE trades, what's my stop? There isn't a stop. So 14 DTE trade, it's a defined risk trade. They're 50 wide on ES. So there's no stop for me. I either take a $2,500 loss, or what I will actually do is I'll roll these out and reestablish a new one 14 days out for credit. So if they get tested, I'll roll them out. But there is there's no interim management on these. It's a defined risk iron condor on it. So I've only got a 50 wide on both ends. So if I have to, take the full, I can. It's $2,500 minus my credit. So really it's like 2,400. It's less than 2% of my total portfolio. So that's well within my max loss guidelines. However, I'm going to let these things just keep running the way they are. They move up, like on a day like today, it's going to put pressure on my account as I look at them, because you've got this 4,300 here and we're at 4,164. So we're 150 points, 140 points away, actually 4,250. So we're actually 100 points away from getting into the call side. So this might be one that we're going to get tested on. We'll see. We have 2 days to go. So depends on whether the market's going to run up another 100 points in 2 days. We'll take a look at that trade live in just a moment. And then spec trades, I have cut almost everything out of here. I own one call in SoFi. Yeah, this same spreadsheet, John, it should be pinned to the top of the Slack channel. So I did pin this to the top of the Slack channel. I can do it again if it's not there anymore. And then down here, I mean, every month, it tracks the months as we go. So I can see, hey, what was your total gain? This is realized in April, realized in May, realized year to date gains. So my year to date gains is almost 20 grand in this account. So I can track what's working, and then I can track by strategy down here. You can see from a strategy standpoint, those initial ones got killed way back here in May when I got out of the 111 and switched directly to the 112s. So that cost me some of my return, even though we ended up with a positive month. We started off negative with the 111. So the 112s have been great. They're working great. So this trade is pretty much toast now. I've moved on to something different, and I've moved away from just the MES naked trades. So you've got the 112s, the 90 DTE strangles, those 14 DTE iron condors, and then some spec trades as well. And you can see some months have been tougher than others. So the spec trades have been the ones that have killed me. I'm just moving away from those. So there's not much in the spec trade individuals that I'm doing. So you can see spec trades now are all down to all 112s except for this SoFi call, which really abnormal that I would just buy a call in that, but this is a leap. So this is a 2024 January leap on SoFi. I don't know if I'm going to leave it there or not, but we'll take a look at. So there's the trades we have on in the account. So let's take a look at the actual portfolio itself. It's just easier to look at them on a spreadsheet than looking at this. Unfortunately, Tastyworks does not give you the ability to group, which makes it a real pain to track these without a spreadsheet. Otherwise, you're just looking at this massive list here, trying to figure out what are these things and what's paired with what. So there's where we are in ES. Yes, we're down a bit today. Why are we down? Well, we're down primarily because you've got this trade here where this is that one that's going to expire on Wednesday. So right now, this thing's a little bit, I mean, if you look at the overall, it's pretty close to a wash on this particular one. So we're getting close to a wash. In fact, what's down here? Did I lose my? All right, so just from a tracking standpoint, here's that iron condor that expires in 2 days. And we put this one on for 360. So we're basically at a dead wash right now. But that one's putting some pressure on today on this because obviously with this 60-point move in the market, we're getting closer to this strike. Oh, we got 2 days to go. And then we also have another one that's expiring next Wednesday. And I put these in at 5 cents now that Tastyworks finally allows you to put in GTC orders. As soon as we can do grouping, better, but this is the only way I can really track it on here. We put this on for 310. It's at $1.15, so it's at like a 60% winner already for next week, but we'll see what happens on them. If I have to, I will play it by ear here, whether I'm going to roll this thing or I'm going to take the loss on it. So it depends where we are. I mean, if we end up at 410, I don't know if I'm going to roll it. I might just take a $1 loss, which is, $50. A $2 loss would be $100. If it's a loss, I'll take that small loss. If it's bigger, I will most likely then look to roll out whatever's being tested. So that gives you a little bit of an idea of where these iron condors are in the market right now. I still think we're a tad overdone here in the market. So especially with today's pop up, but we could run for a bit. So there's where our some of our ES trades are. We have these two strangles that we put on in ES. I'm just watching both here. This is the one that we put on today for 27.50. So it's still sitting there at 27.50, but I have a 50% close order in on both of these. This one we put on for 30 and it's at 23. So we got a winner going in both of those. So that's all good. And then NASDAQ, we've got two spec trades on, which are both 112s in the NASDAQ. And one thing, when you look at the NASDAQ ones, look how far away you are. I mean, you are 5,000 points away on these. So, but NASDAQ is only a 20 multiple, which means, if you took in the 1425 like we did here, so we took in this 1425 at a 20 multiple, this is a $280 winner. Again, nothing to snap at for that, but it's not a giant winner, but it's decent on margin. And then the same thing with this one. We're just so far away, so that's why I actually doubled the number of contracts for this particular trade, simply because it's a 20 multiple. So this gives me 40 times this 15. So now we're at a $600 trade if it expires worthless. And look how far away. I mean, unless the NASDAQ drops 4,000 points in 39 days. But again, anything's possible. Otherwise, we'll make ourselves some nice money on that. Then RTY, we just have two on. So when you look at my overall strategy, I'm going to make $700 times at least 4 or 5, which is $2,800 to $3,500 on just the 112s on ES. Maybe a strangle will expire for $700 that month, and maybe that'll put me at somewhere around $3,000, $4,000 in the month. Those little 14 DTE jobs that are in here, these don't pay a ton of money, but you can make another $150 a piece times 4 weeks. So there's another 600. And then for spec trades right now, I'm just sitting on, we're just sitting on a couple 112s, 2 in NASDAQ and 2 in RTY. In the Russell, and these will pay off. This is already at 104% profit. We've already made over 700 on this one. This particular, which is expiring in 11 days. If we drop a bit, and we head towards the trap, fine. But it's certainly a winner. I'm okay risking the $21 for the chance to get into a trap in 11 days if we sell off. So you could close. I'm not. This one, it's already at a 50% profit, 54% profit on this particular one. We're halfway there. I want the $720 from this. So I'll wait to see if we can get that $710, whatever is what I want to get out of it. So that's it. We don't have to put a whole lot more on. And this SoFi trade's up a little bit today. It's down a whole $98. What I wanted to take a look at, though, was putting on a triangle. So let's take a look at crude and take a look at a triangle in crude oil potentially. Why? I have a lot of BP in this account, and crude is down a fraction today, but it's still pretty elevated. So I'm going to go out. I don't want to go 72 days. It's too far. All right, I thought I had a trade sitting here. So we're going to put a strangle on in CL. What are my options here? 72. It's a little far, but it's certainly doable. 39 is a little short. I would prefer 45, but I like where CL is standing right now. It's been on a pretty good run. It was up a bit this morning, squeeze breaking out. So I think it's got some upside from here, but that's on the daily. When you look at the weekly, the momentum's coming out on the weekly. So you've got daily forces fighting against the weekly forces. And that to me sets up a nice little triangle opportunity. So we're gonna go 39 days. I'm gonna start around 7 delta, but I'm gonna look to see where's some serious volume opportunities. And it looks like this 90, good volume there. So it's a good width here. So that's right around my 7 delta, all good. And let's go up here around 7 delta and see what we have. So we could go to 150. You know, which is at 56, but let's take a look at what we have. This looks pretty good, and it's a little safer. There's a good amount of interest down here, 6%. So the 155. So we do the 90, 155. Now remember, this is a $1,000 multiple or 1,000 multiple for $1.19. Buying power is 55,000 or $5,500 on this. So when I take a look, my trade's going to cost me 5,500. It could net me 1,100. However, I close these at a 50% winner. 50% of 1,100, 1,190 is really like 560, 580, 90 bucks, almost $600 on a $5,500 trade in 39 days. So just over a month to make 10%. That's kind of what I'm always looking at. So we're going to send that order and we'll let that play. We might have to fuss around with it, but we're close. We're right in that range here. So let's see if this thing gets tagged today. But that's a nice spread that I want to put on today. All right, let's take a look at anything else, any other trades. I had posted some stuff in Slack as well over the weekend, and let's take a look at what some of those were. I think there was a gold triangle as well. So when I take a look at gold, let's take a look. All right, so back in here, taking a look at the gold chart. Here's the daily. Let's go daily 6 month. So here's gold's been in a nice solid downtrend. Oh, we just got filled on oil. Let's look at gold here. You got a little bit of a squeeze trying to break out to the upside, but you've got momentum coming out here. It's been in an uptrend. PSAR could reverse because I think we're bouncing off this trend line and heading lower, and everything here looks to be heading lower in gold. So I think gold has some down on the daily. If you take a look at the weekly though, gold is oversold and starting to bounce here a bit and has a little bit of a range to go. So again, push and pull factors, just like in CL here. CL, it's starting to get a bit overbought, but it could run, but it's getting a bit overbought, but it just gave a PSAR reversal signal, touched the top, next day, boom, reversed. Now we have a bullish PSAR signal, but we are overbought on the weekly. But taking a look at the daily, we've already been on this long signal, so now we're on a long, but we're sitting in this oversold, which again, we can sit in oversold here for a month or two. So we can sit in oversold for almost a month and a half at the most. We've been up here for at least, not quite a month, not a month, like a week or so. But I like the opportunity here. So we put in that CL where we're way up here at the 150. So we did actually the 155. We did. So we're way up here at 155 and we're way down here at 90 with some pressure to the upside potentially, but we're in this channel too. So if you look at the regression channel, we're at the top of the regression channel. So if it did bounce out of it, then came back into it. It hasn't really been to the bottom of this channel. But I'm going to guess as soon as we get closer to the top of this regression channel here, it's ideally, you are going to think it's going to revert back to the mean somewhere in the 100 to 100, 105, 110 range, somewhere in here. It's a down day today. So that's why I put that CL trade on. Since I put that on, I'm not going to do one in gold. I'll leave that alone. Take a look at Amazon. You guys were asking about Amazon. Amazon, if you were going long, I mean, the time to get long was back here on nearly everything. I mean, this was the time for everyone to get long, especially when it came back down and bounced a second time and triggered another piece, our bullish signal. Now look where you are. You're at the top and the green is no longer leading the red line. When the green's above it, okay, then you've got a pretty solid uptrend. As soon as that green starts to touch it, well, now you're either going sideways or you're going to tip over. Well, you're starting to get to that point where they're touching now, and that could be the top. Now, this may show a little bit more to go on the CCI. Super trend is green, so it's been a green go, but you got the 8 crossing the 21, really bullish, good bullish sign here, but you got the 50 hanging out up here as some resistance, and this line here also being some resistance. And so will you fill this gap? Maybe. So if we fill this gap, it could potentially resume its low, which would also be corresponding to banking on this thing. So I really think you got to take a watch here on Amazon. I mean, if you're bullish, I think you got to be very cautious on Amazon. So there's that trend line here. So it came down, bounced on it again, bounced on it again, and then gapped from there. So I think this is the target. I think if we get anywhere near here, I will be short Amazon. But which is still another, I don't know, 10 points, which, considering this thing had a giant split, you know, what was it, 20 for 1 or something like that? That 10 points is a 200-point normal run for Amazon. But look how far extended MACD is on it. So this MACD is getting long in the tooth. It had a little bit of a down tick and then back up again, and your squeeze is breaking. So, I mean, we definitely could run on Amazon, but I'm more bearish here the remainder of the year. I don't think there's not a catalyst that the stock's doing, that there's anything good with the company. It's just it's split. And as soon as they said split, everybody started to buy. So a split, it's a nice little bump, but it doesn't affect the underlying fundamentals. So I certainly think this spot in Amazon is a good target. It might be a really good butterfly trade, but look, we ran and then we're coming back a bit today. So things are settling down a little bit out there. This could signal that, all right, that might be about it. But, you know, I think we could go to 130, 134. But I think we're tipping back over from here. And I don't really know how this lines up well. But if we were to draw that downtrend line through here, okay, we basically almost hit it today, depending on how well you draw that line. So we're at the downtrend line. And again, I think Amazon could keep going. I think from a longer term standpoint on the weekly, it's a little overdone. But you've been in this sideways consolidating pattern. But let's go take a look at this monthly. And I think on this monthly, we're just beginning to fire. MACD's been firing for a bit, but squeeze is just beginning to get going. So I think anything up here, hitting this 21 EMA, again, around that 140 mark, 135 or so. I still think that's the goal. I think if we hit that thing, we could tip over, and I think we could keep running lower. It's a lower price stock now, so it's certainly different, but the same thing, it's the exact same thing here in Microsoft, but Microsoft squeeze hasn't even gone negative yet. MACD did. So I think Microsoft could have more to go. I mean, this 50 moving average is something to keep an eye on a lot of these stocks. Look at the squeeze momentum is coming out. MACD is finally negative. These are all in the monthly charts. I think you could go, you're definitely going to 141, but you could go even further down on that. Netflix might have further to go. I think Google, in years, this thing's never even gone negative on the squeeze on the monthly. I think that time is coming. Look at the momentum just coming out of this month after month after month after month after month. It was a long squeeze upwards. I think you got problems coming out in the market on all of these. Nvidia just starting to go negative, and it did have a little bit of a dip in here, not great, but it didn't have the momentum that this has coming off. Again, the 50 moving average on these. Tesla, same thing. I think on Tesla, you haven't gone negative either on the squeeze. So you could see, I think you could see 520 to 4 something on Tesla. I think something in this range on Tesla. AMD, same type of thing, that just the monthly momentum is totally coming out. On the daily, looks good. Now we had this little resistance level here on an uptrend. Perfect. You broke it. Coming back down, you might bounce off of this trend line and that support. Bam, this thing may run higher. So might be a good, squeeze is firing. Things look good on AMD, but man, nothing looks good enough for me to want to play stocks right now. So the question is, why am I using futures instead of options on the stock or the ticker? Simply because futures gives me fantastic leverage. Futures use a lot less margin than SPY or QQQ if I'm trading futures. So I'm doing it because it's a higher leveraged instrument here. So if I'm going to place a trade in ES, and we got just a few minutes here. If I'm going to place a trade in ES, take a look at, let's go to July 15th, and let's put on a 112 trade. Okay, so 112 trade, I'm going to go $6 for the spread, and then I'm going to buy 2 of these. All right, so on this particular trade, when I'm looking at it here, I'm getting my $14 credit, and I'm doing the 34.50, 38.90, and the 39.20. I'm getting $14, let's just round it, and I'm spending look at my buying power over here, 77.64 is my BP usage. Okay. So BP usage on this one, and I'm going to have a $712 cost. Now that's if it expires in there, I make $700, right? So I can make $700 on buying power of 77.58. Okay. If I was to trade this in SPY, now I don't have the same things available, but if I'm here in SPY, it was the 345. Okay, that was 2 of those. And then I did the 389 and the 39.20. Okay, so again, same type of credit in here. My buying power on this one is 69.64 on SPY. Okay, but look what I'm making. All right, so on SPY, if this thing expires, I'm going to make $147. Okay, so for the same trade, I'm making $147, but I'm still using almost $7,000 in BP. Okay, so when I'm using ES, I'm essentially making, 5 times, because that's the multiple difference. I'm making 5 times more using ES, okay, than I would be using SPY for the same buying power uses. Yes, you have span margin, you have futures, you have all of that stuff to fuss with, but I can, for the same buying power, I'm making 5 times this amount. Okay, so instead of my profit being 700, my profit here, it's only $144. To me, now if you have portfolio margin, okay, but I don't in this account. This account that I'm trading with you guys in this service is not a portfolio managed account. Maybe I'll convert it to that, but not at this point. Okay, if I was to do the same thing in SPX under standard margin, okay, what is that? Where were we? July 15th. Okay, that was the 34.50. Okay, it was this thing times 2. Okay, and then I had the 38.90 and the 39.20. Okay, as my width. All right, so this one, same credit that I was receiving before, which is going to give me $1,300, the exact same amount of credit that ES gave me, but my buying power is now $70,000. Okay, so now my buying power is 10 times greater than what ES was to make the same amount of money. So ES and futures, absolutely, when you're doing these, it's the way to go. You just don't want to get carried away. You don't want to overdo it. You've got to be wary of span margin. And I think that'll explain a bit of that for you guys. When I take a look at the account today, we're basically flat on the day. So I'm not doing those ES naked puts anymore because the risk is too high. The risk was high on those. I mean, I can roll them out, but the risk was high on those naked puts, and they were turning into losses if I'm closing them out. Even when I turned them into 1-1-1 trades, I was still taking losses. The 1-1-2, it gets me so much farther away. I've got a debit spread in there that offsets that, and I like the safety of it. So these have certainly paid off. Plus, I have a lot less trades on. So as I'm busy and moving around, and I was in Europe and doing a variety of different things, as I travel around, I don't want to have to trade. I don't have to track, 3 to 5 of these things a week when I can track, a whole 4 or 5 a month. So my core strategy is now, the core strategy is 1-1-2 trades, and I want those expiring at least one a week, and then I might get an extra one in there on ES. So 4 to 5 of those a month. For me, it's $700 a pop. So that's going to be somewhere between, somewhere around 3,500 in ES. Those iron condors, I'm going to have one of those expire a month. So either $600 or $750 a month on those. And then a couple random 1-1-2s and strangles in as spec trades. That's going to give me an extra $1,000 there typically a month. And then I have the 90 DTE strangles, which sometimes 1 or 2. Last month it was all 3 expired, and those are about $700 a pop. So $700 to $2,000 extra, and that's it. Don't have to worry about market stocks. I'm going to stay away from stocks. I'm going to try not to trade anything. I have that SoFi thing on. Man, I don't know that I want to stick in that thing either. It was just kind of a long-term gamble shot. I don't know why I even did it in this account. and I might just get rid of it as soon as it's slightly profitable. If SoFi makes a run. If SoFi doesn't make a run, I might just take a couple $100 loss and get out of it or whatever. Okay, so hopefully this helps, gives you guys an idea of what we're looking at out there today, and what I see the markets doing. Markets have definitely weakened today, so things are getting a lot weaker. When we take a look at the markets, only up 30 points now. It's given half the gains back for the day, and it's only 11:30 in the morning. So it's struggling with this fib level. It's struggling with this little support level here, even though it's positive. As long as it holds, okay, we still get a nice bounce. But MACD is telling me that Mojo's coming out of it. PSAR is telling me that we're good, but the Stomo is telling me we could be tipping over in the market here, and I just don't see upside to the market, which means I don't want to be long any stocks. I like the trades we're in, and I think we're making money. We're up well over 10% for the year right now. The markets are down, what, 15, 20% or something as a whole. What's SPY down right now? I mean, SPY, year to date, SPY's down 13.4%. So we're definitely up 25% ahead of SPY for the year. I'll look at some IWM as well at some point in time, but I just wanted to give you guys a good overview. So it's been a good hour for everybody. This gives you a reason for it. And then when do I put those strangles on? Again, when I want to get to 3 in ES, and then something like today, and I'll post in a minute, like CL is, I've got a lot of extra buying power. I want to get a little bit of a trade on. I have some room, and I like, when I'm taking a look at the charts, what do I see? If I'm seeing the daily saying one thing and the weekly saying another, I think that's a good opportunity for a strangle. And you've got good premium, especially when you're looking at like CL at 33, which is not the highest, but you've got decent premiums out there. So, all right. Any other questions before we jump today? If not, we'll get going. You can ask in Slack, and we'll paste our trade in the group. Thanks, everybody. Enjoy a fantastic rest of your day.